will hope that Eni will be one of the first companies to be interested in developing gas in Lebanon, not only because of your excellent presentation, but we have to remember that Eni was the company that introduced under Enrico Mattei the concept of joint ventures, and they changed the whole structure of the oil industry because he introduced this concept in 1957, well before the takeover of the oil companies by other countries. And then from Iran, it moved into Syria and Libya. So in essence, Eni could really contribute to the future of Lebanon. And then I'm calling on a compatriot Lebanese, I believe, who is, well, half Lebanese, who is responsible for the total exploration in the Eastern Mediterranean, or even broader, Mr. Kassis. Please.
Mesdames et Messieurs, Excellences, c'est un plaisir pour moi d'être à Beyrouth aujourd'hui. Ça fait très longtemps que je n'étais pas venu, donc d'où le plaisir. C'est aussi un honneur de donner la parole à Total pour donner son point de vue. Et si vous me permettez, je vais passer à l'anglais pour la suite de ma présentation. I think a lot has been said this morning about the dramatic changes that are shaping up the energy business for the past 2 years. Obviously, they create challenges. The word of opportunities have been also mentioned. If you allow me, I will basically start to have a wider view, not geopolitical, but more what's going on in our industry. It will be echoing what Mr. Ockstein and His Excellency Pistelli have just said before, focusing back on exploration, deep offshore, and some I would say, not guidelines, but lines of thinking to how a new country should enter, that wishes to enter that business, can learn from others. It has been said between 2010 and 2014, oil prices have been stable, above $100 per barrel. It was as if it was a kind of floor, stable, but everybody forgot the basic essence of oil. Just few figures, they were mentioned earlier this morning. June 1st, 2014, Brent was 112. January 1st, 15, it was 48. February this year, it was 30. And right now, we are almost at 50. It's about volatility. We are rediscovering that it's a volatile commodity. We all forgot that. There are a number of factors that are underlying this. Maybe some other expert would expand on it, but definitely it is a result of an oversupply situation, both in oil and gas, in particular following the non-conventional revolution that took place in the US, but also slower demand in East Asia, and more particularly in China. We've been there before. The industry has been there before. We rediscovered that our industry is cyclical by essence. We faced several price shocks in the past and managed to get through. Some people tend to compare the situation today to what has happened in the mid-80s. But there's one difference. The dive is much steeper than previous price shocks, and has called, as we've seen it, for a strong reaction from the industry across the board. So we have to manage that humbly and modestly, and recognize, at least ourselves, operators, we do not control oil and gas prices, and yet we have to live with this uncertain environment. Okay, let me move ahead anyway. The immediate effect of this fall is that players in the industry had to adapt quickly. starting by managing the expenditures. It has been mentioned this morning between 2014. In 2014, the level of investment in E&P was around 700. We may be below 400. Mr. Hochstein mentioned $300 billion investment, 40% reduction, more than that. We took our part. We reduced our expenditures. We deferred investment. We reduced our operating expenditures in E&P. And there is an impact, let's face it. When you drill less wells, when you put less production on stream, taking into account the fact that there is a global natural decline, the barrels that are consumed today are not replaced. And in few years, how long? But one thing we know is that between the time you start constructing a new, huge, large development and the time it comes into production, on average, you need 4 years. So it may have an impact starting the next decade. Prices will go up, but I'm not an expert, so I will not pretend to know when, how, until which level. Gas in all that. There are abundant gas resources, it has been mentioned earlier, and to satisfy the demand growth and fight decline, the market will need by 2035 300 BCF a day of new gas production, 400 million tons per year of LNG. Demand for natural gas will grow by 2%, and that of LNG by 4%. Those markets will be driven by China, India, where demand of LNG will double between today and 2030. The potential is enormous. And the LNG is helping the market to become more global, more flexible, creating flows between markets, hubs, with certain regional aspects. But as was mentioned as well, in the short term, there is also abundance of LNG, with a number of projects, either sanctions or to be sanctioned in the US, in Australia, where in the coming 10 years, there will be oversupply. It will find its place, and Europe will be one of the places where that LNG, in particular from US, will find an outlet. So what does a company like us do to adapt? As we have to manage the short term, definitely, but we shouldn't lose from sight the long term, taking into account in particular climate change, and it has been mentioned, COP21. It's a challenge, it's an opportunity as well. Energy demand definitely will grow between 2020 and 2035. And if we take the IEA 2 degrees roadmap, it's not our assumption, the IEA assumption, we will still need oil and gas, because 46% of the energy mix in this very ambitious scenario will still be oil and gas. In that hydrocarbon share, gas will play an increasing role. After factoring in unconventional gas resources, 140 years of consumption, gas will provide a sustainable response to rising global energy demand. Sustainable and efficient, because gas is a flexible source of energy. It's also the perfect partner of renewable energies. It has been mentioned this morning, providing backup when there is no sunlight or wind, or serving as a source that has less emissions compared to coal. It makes gas more competitive in comparison to coal. We will need also to work on energy efficiency, and there's a room for renewables and biofuels. We've embedded this 2 degrees roadmap in our strategy and our ambition for the coming 2 years, and it has been mentioned by our CEO. We want to facilitate, contribute to the energy transition by developing lower carbon energy sources. We're shifting our energy mix in the direction that responds to that. Having an offensive policy on gas, today it represents 50% of our production. We're exiting the coal business. On oil, we're focusing on project and concentrating on bringing down their cost, because we have to work out in an environment with uncertain prices and low prices. As far as renewable business, solar and biofuels are objectives for us. We're already in solar business with SunPower, who is the second largest solar company in the world, and we plan to have 20% of our business in 2030 out of renewables. We advocate for a carbon pricing mechanism, speeding the substitution of coal by gas, looking to energy storage, electricity trading, energy efficiency. Where is our E&P strategy in that? Obviously, safety is our first priority. We bring technological expertise. That's what an operator like a company like Total and others do. We bring innovation to maintain, develop operational excellence, operation efficiency, managing large projects, bringing down costs, because it is important, whether capital cost or operating expenditures. Exploration, and I'll come back to it, is part of our core business, and we plan to increase its contribution for reserve replacement. And we capitalize on our strengths, where we have historical positions. Middle East, obviously, is one of them. In areas of technical excellence, deep offshore and LNG, and again, this is an area where those industries have a future, without forgetting, of course, conventional resources. And develop where we can, elsewhere, opening new countries where available large and economical resources are. In exploration, it's here, East Mediterranean. We're talking about it. It's about exploration. It's about deep offshore. It's about LNG. And as I said, it's part of our core business, and we have, even though it has been reduced, but we're still spending $1.5 billion per year on exploration. And in East Med, we're exploring in Egypt and in Cyprus. We hope one day to be able to do it here in Lebanon, obviously. In deep offshore, the companies, and we are a pioneer in that area, we've gone through considerable effort to develop technologies that push the limits of deep water exploration and development. Finding a reservoir in a deep water environment is hard. Bringing it on stream is even more challenging. Innovation, technological excellence have allowed us to push the limits, despite difficulties in such areas. But technology is not, it has been said, is not everything. One of our greatest challenges is our ability to profitably develop those resources once discovered, manage the cost, reduce it. We're working on it. Because those projects will remain capitalistic, large investment will be required, and you have to manage that again with a word of uncertainty, volatility, and be able to sustain low prices. But the answer is also, and it has, in the legal and fiscal regimes that countries adopt. They have to be attractive, they have to be stable so that they attract the investment. Again, the changes the industry is going through means there's competition. There's competition between projects, and investment will go where it's I would say the return, but when I talk about return, is for everybody, obviously for the host state, but also for the investor, because it's a long-term business as it has been said. Finally, you can find, you can develop, but when it comes to gas, you need a market. There has been a number of gas discoveries in the area. They will supply domestic market, but depending at the end of the day of the size of the resources, you may have to go to more distant market. Yes, Eastern Mediterranean is well placed to serve Europe, but that gas will have to compete in a very liquid market where prices have came down, where they will be in the future, we don't know. And for that, you need to also build the link to the market, look to innovative solutions, to different than what was the case a few years ago. Definitely we can contribute to it. To conclude, I will use the word, there's a revolution going in our industry, but there are opportunities. Each player has its own role to play to make it happen. Host countries, operators, customers, to a certain extent, certainly service companies, to make those projects, good projects, the best project come through. Thank you.